We wish you a Merry Christmas. We wish you a Merry Christmas. We wish you a Merry Christmas and a Happy New Year.
Merry Christmas, everyone.
Merry Christmas.
Merry Christmas.
Merry Christmas.
Wishing you all a Merry Christmas.
Merry Christmas.
Merry Christmas.
Merry Christmas.
We want to say Merry Christmas and Happy New Year.
Wish you and yours a very Merry Christmas.
Just wanted to thank you all for your business and wish you a Merry Christmas and a Happy New Year.
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 Happy New Year from all of us at the Comstock Channel and Comstock Investments.
Good afternoon, everyone. Eric Relph for Comstock Investments, taking over the Comstock Channel for Marlon Bowling for one more day here. We've got some personal things to attend to. Going to go over a little market recap and look at some reports that came out this afternoon. Before we do that, I want to remind everyone to go to our website at comstock.com and sign up for a month of the Comstock Report for just $1 and catch all the must-read information that Justin writes in that morning Comstock Report. It is a twice daily email. We do a video and written report in the morning, video and written report in the afternoon, and that's nearly every market day. Of course, we've got some exceptions this week because of the Christmas holiday. So this is the last day that we'll be putting out any reports of any kind until Friday, because we do have shortened sessions tomorrow, as well as no overnight on Tuesday night or Wednesday night. So we'll be getting back at it in earnest on Thursday morning. So we really won't have a lot going on until Friday when we get that full session after the overnight. So I want to say happy birthday also, Justin.
Thank you.
Wrapped up before the holiday here. So I want to take a look first at what we saw in the trade today. Although low volume, we did see a couple notable things. I think one thing that stood out to me was the weakness in the beans that could have gone either direction, really, because of the finish on Friday. It wouldn't have been a surprise to see some follow-through strength. We just couldn't muster it.
Yeah. Also, following that up, we saw that soy oil market correct a little bit higher today. It was kind of a little bit of a surprise. We were under that 40 cents range. Seems like we hover right in that 38 to 40 cents, but failed to get much steam when you look at the charts up over into the 42-cent range on the soy oil side of the world.
Yeah, I mean, a little bit of strength there, upper end of what we've been trading for the last 4 sessions or so. And we didn't see any follow through where we really wanted to after Friday's blow off, and that was in the meal.
Yeah, and I've followed along the old time sayings, the meal rallies are the real rallies. And I know you've said that as well. It would have been nice to see that meal trade a little bit higher here today, going into the long week or the shortened week. But we'll see what shakes out come Thursday and Friday.
Yeah, now in the case of the corn, finish up a half a penny, upper end of the range, just a half a penny off the high of the day, actually, at 447 3/4 in that March contract. Struggling against obvious resistance as everyone's wanting to fade those previous highs at 451 and 452. And where does that selling start to dry up, and maybe we could get a push through that? Not really sure, but today at least we were getting some assistance from the wheat, helping push the corn along and keep it in the green despite what was going on in the soybeans. So maybe the wheat could be a leader as we move through the next little bit here. I don't know. What do you think?
Historically, this is the time of the year we kill the wheat crop, right? I know you've traveled and said that the wheat looks absolutely phenomenal in Kansas. But if we're going to kill the wheat off, it would probably be in the next month or so. If we see a rally in the wheat, I definitely think you have some potential to see some spillover into the corn. Maybe we close above that resistance, open the leg a little bit higher. As of now, though, we are going to need some sort of boost to get that through. We had crude oil rally less than a week ago, a couple bucks, and guess what? We didn't pull corn up through it. We came up to those highs, but we couldn't get enough steam to pull through it. The overhanging on the bean market still is weighing down on corn. Last Wednesday, we saw a sharply lower day on beans. I actually thought corn performed pretty decent. What were we down about 6 cents that day? If we could have got a little bit of, spillover from the wheat, it's like the corn wants to make a move here, but it just needs a little bit of help.
Yeah, it's like it needs someone to join the party with it and can't do it on its own. It's with the demand story we've got going on. It's kind of remarkable that it can't stand on its own legs, but so far that's been the situation. And well, I guess we'll just have to see if that continues to play out that way.
I really think as we go into the first of the year, though, and those commitment of traders reports are delayed. We talk about it all the time. It's delayed data, but after we square these positions up going into the end of the year, where do the funds want to come in at after the first of the year? I think you have a lot riding on the weather forecast in the next 10 days in South America. Possibly we could get a boost from that as well.
Yeah, and we're continuing to hear stories about deferred forecast in Argentina not looking real hot. That could make a big difference. That's obviously what spurred the meal yesterday. Just couldn't get any follow through today. I want to touch briefly before we move on. Outside markets are going to be a little bit chaotic and low volume here for the next couple of days. I don't know if we can really hang our hat on much of anything there until we get past the first of the year and get into some full sessions. But we did have a sharply mixed session in the metals today. Gold down $20 right now, silver up 26. A little bit of remarkable trade there. I want to talk briefly before we get into these reports about the January feeder cattle. Had coming into the day nearly an $8 deficit to the CME cash feeder cattle index, and really was about the only contract across the cattle complex that really performed today. I think we see some kind of reconciliation continue there, or are we just going to see the index fade away?
The sales that I watch, it doesn't appear that the index is going to fade away. Historically, seasonality, that's such a wide spread. You would think that it's going to have to be a little bit of both, right? Board maybe rallying a little bit, feeder index coming down a little bit, but these feeder cattle seem to be very hot yet in the barns yet. So I kind of believe that it's awful tough to sell those feeder cattle at that price when we have the index so far ahead of it.
Yeah, and I generally agree. And I felt like the January feeders was the one place that could see a real spur because it does have to settle to the cash, whereas the live cattle don't necessarily have to, although should be maybe a little more in line than what we're seeing right now with a $3 to $4 disparagement. And we're at the end of the spot month. So going to have to see where the weighted averages come in for the next week and a half because that could be a big deal.
It's interesting to note on that topic as well, looking at the live cattle contracts. We are seeing some bull spreading, some bear spreading where the front month is down lower than the deferreds. You look out at those June contracts, August contracts, now granted, they're already a discount to the front month, but it seems like the market is putting a little bit more confidence that we're going to be able to hold these cattle prices into the first and second quarter of next year.
That's what it would appear. I mean, you look here in December, the highest price contract on the board. And last year, this time of year, we were, sharply higher. I remember putting LRP on for feeder cattle at $15 above the current board around this time last year for late summer. I mean, we just don't have those kind of opportunities right now.
We'll find out if they come around.
Yeah, for sure. And hopefully they will. I mean, it's definitely good for our business, and it's certainly good for the producers that are having to fight these battles here. Okay, so get into the data points. Going to go cold storage first. I guess what jumped off the screen at you on this one?
Overall cold storage numbers, the pork belly number was one that I was watching. We saw a really good run in that pork cutout in October. We saw the stocks draw down. Came in 22.5 on that. Yes, it was a build over the previous month, but still significantly below prior years. I really look at this pork belly market, and I put it in the report this morning. It kind of reminds me of the cattle cutout. If we see orders come in, boom, we got a $3, $4, $5 move in the cattle complex and the choice cuts. And bellies are the same way, except the range trading, somewhere between 5 and 13 the last couple of days here. So keeping an eye on that belly market, I really feel like it's going to be tough to rally hogs unless you see that belly market move. Now, we were at $1.70 bellies not that long ago, traded down to just barely holding above $1. Working a little bit higher now in that $1.20 range, but moving forward here, we have the room in the cold storage if they so elect to put those in the freezer. Look somewhere in that 6-month shelf life for those bellies. Cost of carry with storage and interest. It'll be interesting to see as we move into that first quarter if that market sets back, if they start refilling that cold storage for summer BLT season.
Yeah, I mean, to glance at versus previous report, 140% on the belly, 139% on the belly. But when you look at that compared to last year, we're at 47%. So the beat goes on there. Total pork at 92 versus last month, 92% versus last month, 94% versus last year. So still, this is something that is fairly supportive and goes right into what we've been talking about with regards to maybe there's more of a story out there on a volume standpoint than what we're hearing. And we've got clients with empty buildings and everything that goes along with the PERS stories. but you're just not hearing a lot about it because of the consolidation in the industry.
Agreed. However, looking back at that commitment of traders report that we talked about just a minute ago, funds have been building a massive long. They've been doing it for 2 months now.
Yep.
They have been buying this hog market. Export sales up until the last 2 reports were relatively actually pretty good. Mm-hmm. Is that preemptive buying? Only time will tell. But the product has moved, and that's all that really matters, right?
Yeah, absolutely. I mean, it's finding buyers, right? That's the most important piece of all of this, and everything is a derivative of the product, and that's just the way it's going to be. So, okay, so let's go over to hog and pig now. Again, what jumped off the screen?
Well, what jumped off the page at me is the revisions, and we can get into that in just a second. But you look at all hog and pig at a 101, average estimate at 100. Now, following up to your comment just a second ago about empty barns, that is not just a Northwest Iowa thing or a Northeast Iowa or a Minnesota thing. I have heard that from multiple geographic locations, mm-hmm. and not that all barns are empty, but there is pig space out there with nothing in it. So you look at these all, basically all the numbers were right on, except for maybe that I think the breeding number was down just a little bit. And that maybe surprises me when I think about the profitability that we saw in the fourth quarter that we normally don't see in those hogs looking forward. Or does that tell a bigger story of how bad this PRRS is and what they're having to do to keep numbers up in the barns?
Yeah. And what's the time frame before we know the answers to those questions? Again, with the industry being so consolidated and integrated, it's hard to get any real information out to the general public, and we just have a hard time keeping up. Okay, so that wraps up the hog and pig report information. Justin, anything else you want to add before we let you go enjoy your birthday evening?
Yeah, no, not a lot, other than we did see a little bit of revisions from previous hog and pig report. The September 1 hog and pigs were revised down from 100.2 to 100.5 originally reported. So not a huge number, but it is a revision down. Kept for marketing was revised to 100.4 versus 100.7. The breeding herd was kept the same, but the take-home point is we did start with fewer hogs, whether that, it's a small percentage, but we did start with fewer hogs. We'll see how this first quarter shakes out. Always first quarter hogs are tough to market. We've talked about it over and over again. I don't think we're setting ourselves up for that bearish of a summer, assuming that we can stay away from black swans. But time will tell on that. What are your thoughts moving forward on this hog market?
Well, I keep looking at the mid-year hogs in that 100 to 102 range and wondering, is that reality? Is PRRS going to be enough of an issue as we move from first to second quarter to create a problem during that time frame? I don't know. But to be able to lock up profitability in many of these contracts in December, as we're headed towards the first of the year, not unprecedented, but certainly not common. So I feel like some diligence is due here, and probably some management needs to be considered at these price levels.
Following that up, I also think that if we do see a significantly higher move in the cutout, we see those exports continue to maybe underperform. You move into May, June, July timeframe. That has me a little concerned. How much demand is actually out there. We also have the geopolitical factors into this market, but is that priced in or is it not? I don't really know, but I do like at least taking a look at managing the downside on these. We finally have some profitability. It's been a really long road for those hog farmers the last year and a half. I just don't really want to let this slip away without taking something off the table, or at least protecting it.
Right. And this isn't a time of year when you would normally be thinking about that, but here we are and we have the opportunity. So at least doing something is better than nothing, especially when you can guarantee sustainability for your operation, whether it's LRP or put options or straight up going to the board. But something's got to be talked about here, I think.
Agreed.
So, all right. Well, that does it for today. Marlon will be back in the next time we record on Friday. And you guys have a wonderful Merry Christmas. Justin, happy birthday. Merry Christmas. And we will see you all next time.
Futures trading involves risk. The risk of loss in trading futures and/or options is substantial, and each investor and/or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.